Hey, it's Jahan.
Hey, Jihan. Nice to meet you. Raphael here. Give
How
me
you
one
doing?
second. I'm doing fine. And yourself?
Good, good. Trying to find let's see if I can find a better, slightly less. Maybe it's just this thing. Right. No. Well,
Give me one sec.
where are you based?
I'm based in Berlin. You're in Hong Kong, of course, right?
Yeah.
Yeah. So here in Berlin. So we're a little bit behind just the morning here, but yeah, I guess we should wait for Martin to decide
Yep.
like what's the format, but maybe like well, Martin and Kain, but maybe you and I can think of like what kind of formats we could have. No, so the idea, of course, is to make it centered around like the Gnosis protocol launch, at least on our end, and then somehow bridge it with Synthetix. The good thing is that we have like some upcoming collaborations where they might like replicate liquidity for their stints on diffusion and whatnot.
Right.
So okay, here's Martin. So good. Hey, Martin.
Hey.
Hey, Martin, what's going on?
Hey, just give me a second. Yeah. Doing really well. How are you?
Martin.
Good, man. Good to see you again. Yeah, I don't think we need to kind of like stretch too hard in terms of thinking about format. I mean, I'm just gonna. Yeah. This is the first time we're doing the kind of a virtual Ethereum meetup for Hong Kong, so it should be pretty straightforward. Like, I'll just give a quick welcome to everybody, and just ramble on a little bit about Ethereum and how excited we are, and blah blah blah, and then I'll introduce Martin. I'll just kind of like introduce Martin and Kain. I'm not going to say too much. I mean, I think you guys, I'll leave it to you guys to kind of introduce yourselves. And then, Martin, you can do your thing. And then when you're ready, when you're finished, I don't think you're going to do, you want to do Q&A first, or you want to do like a blended Q&A? You want to do yourself and then Synthetix and then Q&A, or?
I'm fine to always take questions, but I'm fine either way. I mean, really.
To be honest, I don't know so much about Synthetix versus what you guys are about to announce. So is there one way to do it is basically to do like, just let people kind of get through it.
Yeah. Yeah,
and
no,
then,
sure.
Like, so you go, and then I'll, when you're done, just wrap up, and then I'll switch it over to Kain. And then when you're both done, then we just basically do like a little, kind of roundtable type of thing.
Sure.
With people questions, and I'll ask a question.
We definitely, we have, or Kain is also pretty familiar, or we started already kind of a little bit integrating the two systems. So yeah, there is a connection, and it makes sense to then kind of have the Q&A together.
Okay, so let's do that then. So it's pretty simple. Let's keep, I guess, time, and we want to try and keep this to, I think, ideally under an hour. I think virtual meetups tend to be shorter, lose people's attention quicker.
So let's say I have 25 minutes, something like that.
25. If you have 25 minutes and he has 25 minutes, that's 50 minutes.
Yeah, I mean, this is yes, no.
But then there's no time for the
okay,
Q&A.
okay, so better shorter. Okay, I see.
Yeah,
okay.
I would say 20 max, 20 to 20, and then.
Fine.
Okay, we got people joining up. I guess one of the things I want to do is, you guys set up the Zoom, so did you happen to set it up such that it's kind of like, or do we have to ask everybody to mute?
I think you had set it up, didn't you?
Did I?
I think you did, because you included it on the meetup as the invitation, like on the meetup page.
Yeah.
Okay.
So yeah, on that note, well, we did a meetup a few days ago with San Francisco group, and there actually we had someone kind of trying to bust it, and we saw a lot of porn.
Oh no.
Yeah. So yeah, hope this won't happen right here, but
But actually, this is recording. So who's is this?
So I'd assume it's you because like if I leave the meeting, you know, usually it tells you like whether you want to like save it on the cloud or you want to save it in your computer. And I did that prior and it didn't happen, but we should have information here as onto who is the host. One sec.
Let me see if I can change any of the.
Oh, I think there's no host and I see a claim host button. So I'll just go ahead and click it.
Oh, yeah.
Oh no, but I need, yeah, host key is a 6-digit number. Yeah, I'm almost 100% sure that maybe you set it up because I had never set one up with a key, but I'm just wondering who's recording.
Okay, yeah, somebody's recording. Was it possibly Anna that set it up?
It could be. Let me double check with you.
Yeah, it might be me actually. Well, in any case, we'll just have to take our chances. Hopefully, nobody will porn bomb us.
Yeah, I mean, I think well, it took us then a few minutes to figure it out, but of course, then well, you have to switch to the thing where everyone is muted by default. That seems to be an option, and then I think you can kick participants and you know, whatever. After a few minutes, we got it under control, but well,
such is the modern world.
Yeah.
Cool. Well, I guess we'll just wait for people to come on. You're in Berlin as well, Martin?
Yes, we are in Berlin.
Cool.
And have wonderful weather currently, or already for a while. But I mean, we kind of still can go out. So it's just, you know, well, you're just supposed to not meet people, but you can go out.
Yeah.
How are the rules currently in Hong Kong?
So still pretty open actually. We haven't had like a full lockdown here at all. It's mostly just been like distancing, but you know, everybody. It was pretty, you know, knock on wood, contained from the beginning for the most part. People, you know, wearing masks and you know, sanitizing, and so the second wave was actually caused by people coming back. But even that, fortunately, has been relatively contained, not nearly as bad as Singapore. So, yeah.
Restaurants are open, or is this kind of business as usual? Or
no, not business as usual. Restaurants are open, but there is a minimum distance between tables, and all bars are closed, at least I think for another week or so. So yeah, well.
Yeah, I mean that sounds all pretty good. I mean, compared to many other places.
Yeah. Is Kain on? Just to do a check. I don't know who.
I don't see him yet.
Yeah, I don't see him either. I just pinged him the link once more.
Cool.
Hey, Kain.
Hey, what's happening?
Hey. Hey, Martin.
Hey, what's up, Martin?
Hi, Martin. Greetings from Hong Kong. Good to see you.
Good to see you.
Cool. Looks like we've got a bunch of people on. Andrew, Christian. Who's Ivglavas? We got Kain, we got Rafael, we got Wally, and YK. Who's YK? Hi, YK.
Hi guys, I'm Ivan. I'm coming from Croatia.
Nice. Welcome.
Martin and I have met somewhere in Paris and Berlin, if he remembers. I'm the guy from Zagreb.
Oh, nice, nice. Yeah, that's one advantage of virtual meetups.
Yeah.
Great.
Hello, I'm a digital member.
Hi.
Hey, welcome. We had someone named Uno Masanori. Welcome. We're going to get started in maybe like just maybe two more minutes or so as people kind of jump on. And everybody here is very well behaved, so everybody's muted out. We haven't quite figured out how to set up like the kind of broadcast Zoom since this is our first one, so it's not properly configured. So everybody just stay muted unless you have an urgent question.
Perfect.
Martin, where are you? You're in Central?
I'm in my office in Jardine House. So here's a safe place. Feels more safe than my home, so that's good. I'm alone here, so that's okay. I need to leave the call a little bit earlier at 12:30, so it's not being disinterested or bored. It's like I have to take off a bit earlier, so don't take it as a...
We won't exit shame you.
Exactly, don't take it as a sign.
Yeah. Welcome, Francesca. Welcome, Francesco. I think if you don't mind to mute out, we'll get started in a few minutes.
Okay. Come cazzo va a uscire? Leave.
Yeah. Oh, cool. Thanks. There you go. All right. Well, I guess it's about 4:04. Might as well get started. So I guess welcome everybody. Since we have people from all around the world, pretty interesting. This is our first Ethereum Hong Kong meetup, but I guess the idea of like regional meetups no longer makes sense, right? Everything is kind of a remote, international, global meetup, which is pretty interesting. For those of you that don't know, Ethereum HK is one of the, I think was the first Ethereum meetup in Hong Kong, or in Asia. We started in early 2014. And we've been, fortunate to kind of continue running the meetup since then. We've had a number of kind of speakers over that time, including Vitalik a number of times. And our group is really obviously just devoted to promoting Ethereum and educating people about Ethereum. And with that, we're really excited to be able to have both Martin Köppelmann as well as Kain Warwick from Gnosis and Synthetix, respectively, to speak with us today. So bear with us as we kind of first go through our first kind of growing pains of doing a virtual meetup. We're still kind of getting the hang of it, but we really appreciate everybody coming. As you join, you'll notice that everybody's muted out because we don't have the kind of broadcast speaker function yet. So if you don't mind just muting out as you're joining, that will kind of keep it a clear line for everybody. We'll be doing more of these, I think, going forward as we kind of continue to be locked down. On the Ethereum side, I think it's been a pretty exciting time overall. Everybody here on the line obviously is interested in Ethereum, and I imagine is kind of following with bated breath the kind of march towards ETH 2.0 and some of the kind of near-term milestones. But aside from that, I think in the background, what's really been exciting is to see a number of projects who have continued to just quietly hum along and chug along in the background, building applications and building functionality and growing their ecosystems. I think that it's exciting to start seeing projects that have users in the millions starting to come online in limited ways. And it's exciting to see the kind of, not just the underlying protocol gain ground, but also some of the layer 2 applications that provide real value. So, you know, it's exciting time for everybody. And I think that, you know, despite the kind of market's woes and the kind of global pandemic woes, it's exciting to see that we're all kind of continue to stay engaged and kind of promote Ethereum. So with that, I want to welcome our first speaker. We're going to be doing speaker 1 and then speaker 2, and then we'll do a Q&A. So if you don't mind, please keep your questions till the end. What you can do is actually throw your questions into the chat, and I will go through them and we can address them. Otherwise, if you have an urgent question, do me a favor and just click the raise hand button in the participants panel, and we'll handle them that way. And again, for those of you who are joining late, if you don't mind to mute out, just so that we can kind of keep a clear line for everybody as they're speaking. So I'll let the speakers introduce themselves, but first of all, I'd like to welcome both Martin and Kain, and we'll have Martin, the founder of Gnosis, kind of go first and give us the latest and greatest and updates from Gnosis, one of the earliest and really kind of highest profile first generation projects on top of Ethereum. So Martin, thank you for joining us, and please take it away.
Yeah, thank you for the intro. So yeah, Gnosis, super roughly, well, we were probably one of the early projects doing a bunch of things around Ethereum. Our main thing is prediction markets, but kind of since we were like there from the beginning, we just figured out we need to, or we became part of just in general providing Ethereum infrastructure. So we're doing a bunch of things. Built this multi-sig wallet, and now the Gnosis Safe are now maintaining one of the main clients, the former Parity client, now open Ethereum. But today I want to talk about the Gnosis protocol, which is basically a DEX, and should also serve as a foundation for prediction markets. So let me start with screen sharing. Right. Cool. So I want to come on. Yeah. So Gnosis protocol about batch auctions and ring trades. We will learn what that actually is. I will talk about the motivation, learnings, theory, but let's just jump in. So first of all, the most important question, why? Why another DEX? So there are already plenty. And the two things we really wanted from a DEX, and it might surprise you, but no other DEX so far offers those two things, is first of all, what we call full decentralization. And with DEXs, there are two models. One is, or every DEX is non-custodial, and that's of course great. But it's a little bit questionable, or it's an open question of how much value does that add. So kind of how much is it an issue that people don't trust Coinbase, for example? So how much advantage is it that a DEX would be non-custodial versus the other feature, and that's what we call full decentralization, which kind of enables permissionless innovation. And that is really something beyond just being non-custodial. That is something like there is no operator whatsoever. And one very, very simple question to ask to kind of to make this check is, who do you need to ask to add a token? And if the answer is you need to ask someone, well, then it's probably not fully, then it's not fully decentralized. Then there is some form of gatekeeper or some form of operator that makes this decision. So that's number one, and we think that is crucial. There are still so many tokens, or every DeFi project basically as a side side component issues in new token. Just last week, we heard of some entrepreneur who would issue personal tokens, and we kind of still see this long tail of tokens. And I compared kind of to YouTube. Imagine the YouTube model working, but you would need to submit an application to upload this video, and they would need to check it, and they would need to go through it. That would not have been the YouTube model. So we think this the sense of permissionless innovation, anyone can add anything, is super cool. And right now there's one exchange that has traction, that it has this permissionless model, and that's Uniswap. But that doesn't, but then there's a second feature that we wanted to have, and that is fair or best price execution. So if you submit an order, you should, well, there should actually be something like a proper matching engine. And yeah, what's actually the case in many DEXs so far, if you would submit an order, there would not be really something what you usually would call a matching engine. So you would just submit the order, someone can take it, but it's really like an OTC trade. So you can just fill this order and then you can exactly settle at this order, but there's no such thing as a matching engine and a guarantee that you get the best available price. And then there are other issues around front running and stuff like that. Even if two transactions hit at the same block, the same transaction hits at the same block, they would still get a different price. And that's, for example, possible on Uniswap, not in our exchange. Or basically that was the thing we wanted to address: fair or best price execution. So in general, we have for a long time advocated for auction mechanisms, and we think they are very well suited to blockchain. But I will quickly go through this. So we did another protocol previously called the Dutch exchange, and I very roughly, or it had the same intentions, but to some extent we think it didn't work, and I want to show you how the Gnosis protocol now is an improvement over that. So very roughly, Dutch auction is someone wants to sell a bunch of goods, starts at a high price, price continues to fall until there are enough bidders that are willing to buy then all the goods, and then the last price is the clearing price, and all the bidders get the goods at that clearing price, even the bidders that were willing to bid more. And this is how it looks like, or this is how we implemented it in the Dutch X. There was a price function continuously falling, and as soon as there were enough bidders to bid, to kind of buy all the tokens that were being sold, then everyone would get that price, or the auction was cleared at that price. So this mechanism actually fulfilled our two requirements I kind of introduced earlier: full decentralization and kind of fair prices, or kind of a mechanism to find the right clearing price. But it has had significant disadvantages, and a big one was very, very slow. So this period of time where the price would fall, that was 6 hours. So basically it would take at least 6 hours for a trade to clear. In Gnosis protocol now we are still it's still somewhat slow protocol, but we are at least down to 5 minutes from 6 hours. So yeah, very slow. And the second big limitation was, as someone who would want to sell, you didn't have the option to set some limit price or something like that. So you would just put it into this auction mechanism, price would continuously fall down, and you would not have a guarantee kind of that, or you couldn't say, well, after this price, I don't want to sell anymore. Maybe that theoretically possible, but at least implementation-wise, to implement such auctions, specifically if you want to have multiple sellers, is quite hard. With the Gnosis protocol, we address those things. It's faster. You have regular limit prices, or just regular market orders, basically. Sorry, limit orders. And a third one, the liquidity is not split between token pairs. And what I mean by that is that in Gnosis protocol, as you can see here, those were some of the tokens, the first tokens we added, mainly stable coins, that you can trade any token against any other token. So, exchanges, you have a limited set of token pairs. So, for example, on Kraken, one place where GNO tokens are traded, you can trade them against Ether, you can trade them against Bitcoin, you can trade them against dollars and euros. But if you want to trade them against any other token that's traded on Kraken, you can't do that directly. You would always need to go through, well, through Ether or through another token. And that, to some extent, is an issue, specifically with all the stable coins that are popping up. So I think on Ethereum, we have now at least 15 stable coins that all represent basically $1. Or so just on the dollar, we have 15 different stable coins. And then if you would have for each of those pairs, or each of them a trading pair against kind of Ether, against another token and so on, that would really tremendously split up liquidity and would kind of be hard to tackle. In Gnosis protocol, you can really trade any token against any other token. And now the advanced thing is that trades can be settled in so-called rings and ring trades. So a ring trade would basically mean simply if someone wants to sell DAI for USDC, but there is no one who does the opposite trade, but there is a second one who sells USDC for Paxos dollars, and the third one who's selling Paxos for DAI, then those three trades in aggregate you can settle. Right. So, and that of course increases the overall liquidity and just makes the thing also more capital efficient, because you can use you can use the same, or you're not splitting up your capital in those different trading pairs. You can have the capital available for all trading pairs. So the next thing is the batch auction, this batch trading. This is how a normal order book would look like, and the bids and the asks never overlap, because normally we have continuous double auction. So as soon as bid and ask cross, immediately a match is made, price is set. But with our batch auctions, we collect, or kind of always trades are only settled in a 5-minute interval. So every 5 minutes, there's a settlement process. So during this 5 minutes, the bid and the ask book can overlap. And then at the end of the 5 minutes, the clearing price, the optimal price, would be that point where it overlaps. And then all trades are settled at that clearing price. So even this guy who was willing to bid more would still then receive that better price. So it becomes a little bit more complicated to find those clearing prices because we enable those ring trades, and that is because we want to have arbitrage-free prices, or in other words, give as much value as possible to the traders, and not to arbitrageurs who try to extract something. So that means we have the order book for DAI USDC from the previous example, and we could find the clearing price on that one, and we have the order book between PAX and USDC, and we could find the clearing price on that one, or the optimal price. But the prices of token A versus B and token B versus C should also define, if we want to have this arbitrage freeness, the price between A and C. And that price might not necessarily be here the right clearing price if you would just look at those order books. So to find the overall correct clearing prices for all tokens, you need to look at all order books at once. And actually you will end up with this optimization problem. And that's actually not an easy or straightforward algorithm. You won't find it's actually kind of, for those in computer science, an hard computational problem, thing that we generally say is not always 100% solvable, but it's usually solved. I mean, it's you can get good enough results. And how we address this, and specifically how we address this question of who is allowed to settle, who is allowed to set those prices, and specifically under our constraints that we don't want to have any operator, we turn it into a competition. So every 5 minutes, you kind of have the state of the order book, and there might be overlap, so there might be the possibility to settle trades. And then we basically say everyone can suggest a solution, everyone can suggest prices and settlement, and the contract will simply pick the best one, and the best one is what maximizes the overall trader's utility. And so what's trader's utility? If you want to sell, for example, if your limit order says you want to sell 6 DAI, the price 1-to-1, so for USDC, so you want to receive at least 6 USDC. If in the clearing price you would receive more than 6 USDC, so 6.2, your utility would be 0.2. So now maximizing overall utility, or basically you could settle the price here to 6.3. So then you would increase the utility of that trader. Of course, you would probably decrease the utility of the trader that's trading in the other direction. So in general, to maximize the overall utility of all traders, what you really do is maximize the trading volume. So which are the prices where kind of most trades can happen, kind of most things get cleared. If you look into it very in detail, then those things are not exactly the same volume and utility, but to get an intuition, that is enough. So yeah, the advantages are no price discrimination, or and less prone to front running. So that means everyone if you submit your order in this 5-minute time window, everyone will be treated equally, or kind of gets the same clearing price. It doesn't, the exact order is not relevant. Or the order is not relevant at all, and that's we think quite important, because otherwise, you are just opening you up to miners front running you, or kind of those gas price bidding wars. And so on. Of course, there's a few more constraints for a settlement. You need to respect the limit prices of every trader, but kind of that's all stuff you would absolutely expect, and you need to have a positive balance and so on. But that's really kind of right. So on the architecture, again, we mentioned it a few times before, but it's really a key idea. There is no owner or no admin or no one who can stop or change the thing whatsoever. And again, that of course means who can list a token? Well, anyone, and anyone can do any transaction here. And again, the optimization or the settlement is done through this competition. So very shortly, on the time period, so users can submit orders for 5 minutes, and then in the following 4 minutes, solvers can submit those solutions, and concurrently users can submit orders all the time. But if they are in step 2, then they would submit their solution, their order for the next batch. So batches are kind of always, there's always one batch they are concurrently running, or they are sequentially running, and concurrently the previous batch is always solved. Yeah, some technical stuff. Orders are fully stored on chain. Of course, you can also, you don't have to submit your order just in this one batch. You can of course submit an order that's then valid for a long time. For you can say an order is only valid from a specific time. That allows you, for example, to do something very easy like cost averaging into an asset. Say over the next 2 weeks, I want to spend every day $1,000 on kind of, or buy into Ether, stuff like that. Yeah, and one thing that's interesting is you can submit an order without necessarily having a deposit, and I will come why this is useful in a minute. Yeah, so two limitations, limitations are, or the biggest limitations is that trades are not instant. So again, we have this 5-minute time. So you submit your order, only basically 5 to 10 minutes later, you know kind of whether it was cleared and at what price. So yeah, I just wanted to show it you now. So far, I've only talked about the protocol. And now I want to show you our, or the first application, or basically front end. And one thing I want to get your attention here is, if you look at what I'm typing in here, is mesa.ease, and .ease is of course not a regular top level domain, but instead, and you need, so again, I do it again, mesa.ease, and it works because I have MetaMask. It also would work if I would use Brave or Opera. So it doesn't work on every browser yet, but yeah, it's basically looking up the content on ENS, Ethereum Name System, and resolving it to this IPFS content. So long story short, this front end is fully served, decentralized, without any server, and in fact, the owner of this domain mesa.ease, if you look here up, the registrant is actually a DAO, and it is this DXDAO. So basically, if you want to change anything here in this front end, you need to make a proposal to this DAO, and the DAO would need to vote on a new front end. For those of you who don't have MetaMask currently enabled, you can just add .link to the domain, and then you kind of can open it with every browser. So yeah, this is the trading interface. You can do standard stuff. Just look at here's the order book between DAI and USDC. So this is one big use case we want to start with, is decent liquidity between stablecoins. So already we have here 800,000. So you can convert up to 800,000 USDC to DAI with not too much slippage, actually. So if you look here at the price, this is 1.1. So less than 1%, you could convert currently $800,000, which I think is already a good start, given that we launched this only a few days ago. But of course, we hope to further improve that. We definitely hope that we can convert, 1 million from any stablecoin into every other stablecoin with this. And that is one part, how we make it very easy for users to provide, basically to become market makers and provide liquidity of stablecoins. So how it works is you select stablecoins you trust, and Kain will talk more about what SUSD is, Synthetix USD, but let's say I select those three. if I have the assumption that those 3 stablecoins are stable and stay at $1, what I would be doing is I say, okay, I currently only have DAI, but I trust those other stablecoins, USDC and SUSD as well. So at any time, I'm willing to, let's say I have 1,000 DAI, I'm willing to convert them into either SUSD or USDC, or maybe even Tether and all the other ones, as long as I make, let's say, 0.5% on it. So basically, if I sell my 1,000, I'm willing to do it as long as I get 5 backward. And yeah, this is we make very easy. So I could just do it here. Submit those 6 transactions because or six orders. It's 1 transaction, luckily. And again, I would just say I'm willing to trade all the stable coins against every other stablecoin, and then basically as soon as every time someone converts stablecoins, I ideally make my 0.2 or whatever percent.
Hey, Martin, do you have just a quick pause? Do you have a time for a quick question before we kind of move on to Synthetix?
Sure.
Are there any last major features that you wanted to kind of cover? I mean, we also have the Q&A later.
Right. So stablecoins, I got that. So here is just a view of the order book. That was the order book at launch. A few days later, we saw already a bunch of new tokens registered, takeaway, talked a lot about it. And then finally, last point, just because Gnosis, mainly we're doing prediction markets, so I want to shortly get the connection to prediction markets. First of all, we have prediction market offerings available right now, signed PM, and in general, the idea is that later you can also, we start with those stable coins, we start with those tokens, but of course the goal is that prediction markets, or what we call outcome tokens, will later be traded on Gnosis protocol as well. Last remark, today, because this will happen today, we will launch actually a new offering for prediction markets. It will be under the domain coronainformationmarkets.com. We'll launch today, and it will be, as the name suggests, only prediction markets around Corona, like stuff like when will be treatment available, when will be a vaccine available, what will be the case numbers by the end of the year, stuff like that. Cool.
Awesome. Thanks. So just a quick question for me, and then I think there's one other quick question. The first one, the one that I really want to understand is really just around adoption, right? I think that adoption is always kind of the Achilles heel of all of crypto, I think. A lot of great tech, ton of passion, a lot of money, but how do you think about the kind of go-to-market for the Gnosis protocol and to bring on these kind of initial battery of market makers so that you can get past, from 800,000 to, 800 million or something?
So again, we think that is something also we think Uniswap did very successfully, that it made it very easy for regular users or kind of non-professional market makers to effectively become market makers. And again, this is the idea here, that without any kind of knowledge of being a market maker, instead of putting your DAI into something where you earn interest, currently you basically don't earn interest, you could earn, well, not interest, but trading fees via this mechanism.
Got it. And I think Andrew Asmakov had a question. Andrew, do you want to unmute and ask your question?
Yes, sir. Yes. Thank you very much. I was wondering how is Gnosis protocol protected from what we saw recently with the attack on the default ecosystem just these days? Yeah,
I mean, I can just talk about our security process. So So maybe there's actually even a slide here. So basically I can say we have been working on this for a long time. Quite a lot of research. We released the contracts already in January. Had of course had an audit, had a bug bounty program running. So in general, I would say we have a quite high standard of going through many iterations and many reviews before we launch protocols or Gnosis contract, and we built this multi-sig that held literally billions worth of tokens. So far, we didn't have any security issues. So I would say just proper process, proper engineering, proper. It's really about the process. Really, kind of always security audit, always bug bounty, always kind of going through those steps before you release something.
Okay, but on technical level, is it possible to perform such an it's called re-entrance attack?
Yeah,
that was done on defaults.
Yeah, so of course we're very aware of those attacks. So I hope we can't do it. I mean, you would never get a guarantee, but of course we are aware of re-entrances attacks. Of course we are aware that tokens can have malicious code, and specifically if you design a protocol where you allow any token to be traded, then of course you have to build it under the assumption that it contains malicious code. And yes, we did that.
Cool. Just in the interest of time, I think we should move on. Thank you, Martin, for giving us that update. I think at another time, maybe during the Q&A, you can give us also an update on Gnosis, the prediction markets itself. And with that, I want to move on to Kain Warwick from Synthetix, who is partnering or collaborating with Gnosis. Again, kind of expanding the overall ecosystem of kind of DeFi. And Kain, welcome. And please, if you don't mind, give us a couple, notes about yourself and then about Synthetix.
Sure. Thanks very much for having me, and thanks for organizing it. So Synthetix is in, I guess, a similar category to Gnosis protocol, right? There's this emergence of a whole range of different ways of bringing liquidity on chain, right? These decentralized exchanges, and I think one of the most interesting things, and one of the things that got me excited when Martin first walked me through Gnosis protocol is, there's very clear gaps at the moment. We've got on-chain order books like 0x. We've got, automatic market making systems like Uniswap, Curve, etc. We've got these token basket trading systems now, and I think that Gnosis protocol kind of slots into a very specific kind of gap that's in the liquidity market at the moment. So I think that it's going to make a big impact and close, a little bit of the liquidity gap, which I think is good for all of us, because, we're all working to try and bring as much liquidity as possible onto Ethereum, so that people can trade, exclusively on chain, ideally, right, and permissionlessly. So so that's one of the things, I guess, that I'm pretty excited about. But Synthetix is a synthetic asset issuance platform. So we are kind of a hybrid in that we have a shared collateral pool that people are trading against. So you trade against the contracts rather than trading against the counterparty. But we are also an asset issuance platform. So we've got synthetic versions of assets like Bitcoin, gold, etc. And we've been running the project since 2017. It was kind of late 2016, early 2017 where we started working on it. Originally, it was a stablecoin project called Haven. So we were building a USD stablecoin, but we pivoted away from the stablecoin space, given, as one of Martin's examples was, that long list of very large stablecoins with, deep pocketed investors and various parties that we were kind of trying to compete with. But I think in the decentralized stablecoin space, you know, DAI was obviously very dominant. So we made a decision back in 2018 to pivot towards a synthetic asset issuance platform and go into a longer tail of assets, which is, you know, kind of where we ended up today. So I think maybe the best approach would be to just do a walkthrough of Synthetix exchange and you know, what trading on the exchange looks like, and then, you know, I can give a bit of an overview of exactly how the system works and a bit more background. So I'll just share my screen here. Let's see. Good. There we go. So hopefully you can all see that. Cool. So so this is kind of the main page here. You know, very similar to what you know, we've kind of tried to replicate a similar sort of look and feel to what you would get on a centralized exchange. You know, so something like a Binance or you know, Coinbase, etc. So you got a list of markets and pairs that you can trade. This is ordered by the volume today. So there's been about $200,000 worth of volume on the inverse Bitcoin pair, which is something that I'll go into a little bit later. So the inverse or short tokens, which are similar to like a short ETF, obviously have a lot of interest, particularly on you know, down days like this where the markets pull back a little bit. So we'll go and have a look at all of the markets, and we'll pick something. Let's see here. Let's have a look. Why don't we go and have a look at gold? So we have essentially a synthetic version of gold that we track, which you can get price exposure to. So it's a synthetic gold ounce. So we'll have a look at the price here over the last month. We can see it's sitting now at about $1,700. So what we essentially allow you to do is take any one of our synthetic assets and convert it or reprice it via our Oracle system into any other asset. So in this case, we'll take, let's say 500 synthetic US dollars, and we'll convert it into about 1/3 of an ounce of gold. So it looks like 7 Gwei should get us there, give or take. So see how quickly we can get this transaction confirmed. So essentially what we're doing is we're going to burn this synthetic US dollars, and we're going to mint new synthetic gold, right? So there's no counterparty here. There's a pool of SNX holders, which is our collateral token, who have provided collateral, and you know, similar to how you know Uniswap works, where people turn up and they essentially add a bunch of collateral to a pool, and then there's a set of rules around how people can trade and interact with that collateral pool. So in our case, if you're holding any one of the synthetic assets, you have a right to turn up and reprice that asset into any one of the other assets. And there's no slippage. So whatever the spot price is at the time that the Oracle is pushing on chain is what you'll get. And that is sort of irrespective of size. So you can trade, and we've had people trade, you know, 750,000, $1 million worth of, say, you know, US dollars into Bitcoin or vice versa. And, you know, what that means is obviously we can get, you know, we can support very high volumes on the exchange. Because you know, you don't have that liquidity sort of challenge, right, of how do you bootstrap liquidity. So you know, to your question around how do you bring adoption, I think one of the you know, how do you generate adoption and how do you attract traders, I think one of the most interesting things is you don't have that kind of network effect problem where you need to, you know, sort of bootstrap liquidity and match counterparties and you know, attract that liquidity, because anyone who turns up, you know, whether they're trading $50 or $500,000, has the ability to kind of instantly access, you know, as much liquidity as they need, which is a pretty big advantage over a lot of the decentralized exchanges, and you know, something that that I think is a big advantage that we have with Synthetix. So looks like that transaction's confirmed. So you can see the 500 SUSD has been burned. We've then minted about 1/3 of an ounce of gold. and we've then sent the fees, in this case it was $1.5, to our fee address. And I guess the important thing to kind of call out about that transaction as well is that the fees that are generated by this transaction are paid pro rata to all of the people who are staking the network, so all the people who have essentially provided the liquidity and who are acting as this kind of pooled counterparty to all of these exchanges. So one of the other kind of interesting things I think about the exchange that this sort of facilitates. So now we can see we've got some synthetic ether, synthetic USD, synthetic gold. Is we can actually go and we can trade some fairly exotic pairs. So for example, we could trade, let's see, so we have an index, for example, of centralized exchange tokens, which is made up of things like Binance, Huobi, KuCoin, etc. And so you can trade, an index of different exchange tokens, which is quite nice on Ethereum because the liquidity for those exchange tokens is fairly fragmented. So if you wanted to put together a basket of exchange tokens, you'd have to go, to Binance to get one, to KuCoin to get another, Huobi, etc. And in this case, you can kind of get exposure to the entire sector, which over the last say month or so, has been not too bad. It's performing a little bit better. Interestingly, though, we've got another index, which is a DeFi index, which is significantly outperforming the centralized exchange tokens over the last month, which is nice to see the DeFi tokens doing well. And then, as I said, we can also pull up things like our inverse tokens. So let's have a look at inverse ether here. So we can take, for example, inverse ether, and we can trade that against USD. And essentially, what this does is gives you a dollar for dollar price exposure to the inverse movement of ether, right? So if ether goes from $180 down to 160, the inverse ether will move up by $20 as well, which is one of the kind of easiest ways, I guess, to get open a short, for example, on Ethereum.
What is this price? What is this price jump there?
Yeah, that's the rebalancing. Yeah, so let's go back. So yeah, this is the rebalancing that was done last night. So one of the interesting things about the inverse tokens is they're like an ETF where, an inverse ETF where they are rebalanced on a regular basis. They also have an upper and lower bound. So inverse ether hit the lower bound and was repriced to $180 yesterday, and now it's sitting at about 188. So ETH has obviously dropped a little bit today or since last night. And so this inverse ether has appreciated by about $5 since it was reset last night. Cool. So yeah, so that is I guess the kind of the overview of the exchange and I guess a kind of a high level walkthrough of how it all works. I think again, one of the things that we're looking at is expanding the range of assets, and given that we use oracles to pull in prices, things like, for example, WTI or Brent crude, which are fairly topical at the moment, are assets that we can support and are looking to roll out. We're also looking at rolling out individual equities, so things like synthetic Tesla, synthetic Apple shares, and I think for a lot of people who are trading in the crypto space now, they probably already have access to a brokerage account, for example, right? So they could get access to Tesla shares if they wanted to. There might be some costs associated with it, but it's not something that they're sort of prevented from accessing. But what we see in the future as the platform grows and as obviously the Ethereum ecosystem matures, is that essentially anyone with a smartphone, so if you've got a Samsung phone with a built-in crypto wallet that supports Ethereum, you would be able to, go to a local exchange, convert some fiat into Ether, and then, be able to get access to an entire range of different assets like, Tesla, et cetera, ETFs, indexes of equities markets. So one of the most recent assets that we listed is the FTSE and Nikkei. So you can now trade, an index of global equities markets as well, which, again, is something that, not everyone has access to. So, essentially democratizing access to a whole range of assets, and different asset classes, including.
Kane, do you mind if I jump in and ask a question real quick?
Sure, of course, yeah.
So it's super interesting what you're doing. I think, one of the questions that often comes up, because obviously Synthetix are not necessarily a completely new thing, and I think there are different parties that offer them in different ways. I think yours is probably the most extensive that I've seen. When you think about the future of kind of trading and the traditional traders versus the kind of crypto traders, and these two different audiences, the traditional traders obviously trading on the kind of legacy exchanges, the Gnosis and et cetera, and the crypto ones on Binance's and BitMEX's, where do you see it going? I mean, the idea of offering kind of more quote unquote traditional synthetics like, Nikkei and Tesla to the crypto audience, I mean, do you think that's, how do you see that like unfolding? Do you think it's going to be crypto people trading regular stuff in crypto formats and in crypto UX at crypto speeds with crypto leverage? Or do you think it's going to be traditional traders who have started to come into crypto and now they're saying, actually, we want a different way to trade this? Is it more institutional or more retail? So just how do you see that kind of trading unfolding?
Yeah, I think it's going to be very interesting, and it's somewhat hard to predict the phases that it's going to go through. But I think there are traditional traders and institutions that are trading on things like commodities exchanges and traditional stock markets, and then you've got retail participants, right? Who may not be crypto traders or institutional traders trading on existing exchanges. And I think that there's a huge addressable market for access to not just crypto, but any asset class and people who want to hold any asset class. And so I think there is an opportunity to sort of expand access to these different assets, and that's something that I think Synthetix will do. I think there's also a lot of crypto traders who are used to crypto UX and used to Ethereum and used to these things and would like to be able to just trade everything and have price exposure to oil and platinum and every different asset classes they might want, and equities all in their crypto kind of UX and crypto.
Can I ask a question there? Because obviously, like, oil is not going to, I mean, well, maybe these days it will, but typically oil doesn't give you the same type of kind of volatility and potential for returns. I mean, speaking as like a dumb kind of crypto trader, I'm in love with the idea that it could go, the 5x, the 10x, or I don't even know how many, tens of X's it was with Gnosis. but that's kind of the draw of it, right? So where do you think that the value is for traders to trade traditional stuff for crypto?
I mean, if you look at the retail kind of FX markets, right? It's all highly leveraged trading. There's CFD, platforms and various other things that have significant leverage in them. So I think if you want to attract retail traders, you're going to need to have some form of leverage. So trading unleveraged equities indexes is probably not going to be that exciting for the average crypto trader. But I think if you have a platform that supports leverage trading, which we don't yet, but that's kind of the direction we're moving, that supports leverage trading on any asset class, then you do bring in that same kind of crypto UX where they're used to 125x leverage on Binance, and they can now get it on WTI or something like that.
Got it. Okay, cool. I guess with that, we can probably just open it up to the floor if other people have questions. Either on Gnosis protocol or Gnosis prediction markets or Synthetix. I think there's a lot of kind of material that we can talk about. Did you, I don't know if you covered this already, did you guys talk about how you guys are collaborating?
No, we didn't. I mean, we're collaborating in the sense that I'm very excited for the launch of Gnosis protocol, and I think
cool.
you know, as someone who trades pretty actively, I think it's going to be a huge boon for things like stablecoin ETH liquidity, for example, right? Which is still not great. You're still going to get a much better price if you go through an OTC desk or something like that for a large, ETH to stablecoin order. So I think that's really exciting. But as a stablecoin, we do still have a stablecoin, even if we've kind of pivoted away from that. So as a stablecoin platform, that's one of our main on-ramps into Synthetix exchange. It's critical that we have liquidity, and I think Gnosis protocol will be a big facilitator of liquidity going forward, as SUSD and DAI and various other stable coins, accrue liquidity there.
Okay, awesome. Just in the interest of time, I'm just going to repeat some of the questions that are popping up in the chat. So Eve is asking, where do you get the price feed for synthetic assets on exchange?
So at the moment, it's a combination of a centralized price feed that we run, which aggregates a bunch of different feeds from crypto markets and traditional markets. But we are migrating to Chainlink. So that's a process that's been in place for a few months now. And I think we've been live with Chainlink for 3 or 4 months. So we're slowly migrating all the price feeds over to Chainlink.
Got it. Martin, do you guys also use Chainlink to any degree, or how do you feel about the state of kind of like oracles and kind of external information at the moment? The quality and the accessibility and the...
Yeah, so for Gnosis protocol, we don't need any Oracle. For prediction markets, we would need oracles, or we do need oracles, but there it's often quite specific questions. For example, on this Corona markets, you won't find standardized kind of data on the questions we want to ask. Will there be a vaccine available? We have been since years in contact with all the Oracle providers, including Chainlink, on this Corona information markets. It will be it will be a group of experts that kind of will answer those questions and basically be the Oracle.
Cool.
I have a second, I have a question, if I can.
Go for it.
Hello, well, thank you, John, obviously, for putting this up.
Hello,
good to see you. And I have a question for you guys both. I'm seeing some like latest projects on DeFi, I would focus on DeFi, that they are, let's say, promoting a lot this idea of modularity and composability of what they're building, in a sense that they're building products that they can do on Balancer, that can do on Synthetix, can do on Uniswap, and in a sort of way they work either way. And so I would like to ask you guys, what do you think about that? Is it something that makes sense? Is it something that is going to increase efficiency? Is going to increase competition? Is it going to just make it harder for a new user to have the same product on one protocol instead of another one? So what's your thinking around it? Thank you.
In principle, I think this composability is a big plus of DeFi, and I think long term or midterm, long term, that will actually lead to better UX, and simply because more developers have the ability to well, I mean, you have basically this one team that designs a good protocol, and then you have this other guy that they don't know each other that really is good at this particular building this particular UX or this particular interface. For example, DeFi Zap is something that's pretty cool, where you can interact with different protocols with just one transaction. But of course, short term, it will cause a bunch of, or kind of confusion. I think there are like 15, 20 different versions of DAI, R DAI, S DAI, E DAI, I don't know, kind of. So short term, that can be overwhelming. But again, I think long term, this competition or openness, open marketplace or kind of open space for experimentation will lead to better UX and better results and better products. That's my hope, at least.
Yeah, I mean, you know, I think my view is that permissionlessness is a double-edged sword, right? You know, on the one hand, permissionless assets that, you know, can't be frozen or seized or censored or whatever are really easy to steal and you know, get away with, right? If you can get access to them, you know, they're yours, right? And I think that is, you know, kind of the downside of the fact that you have these systems that, you know, as Martin was saying, anyone can turn up, they're open source, they can start integrating, you know, with them, and they don't need to come and ask Martin or myself or someone who's, you know, started the project, is it okay if we go and do this thing, right? Anything that is possible, you know, can be done, which I think is great. But when something goes wrong, it goes really wrong, right? So you have this huge gulf between, you know, you get all this crazy, amazing experimentation, but if an experiment goes wrong, you know, it just kind of blows through everything and can, you know, create chaos. So I think it's something that we need to adapt to. It's a way of approaching things that, you know, requires, you know, a kind of careful approach. And you can never be perfect, but, you know, it's definitely something that I think as the DeFi space matures, we'll get better at, and things will, you know, kind of stabilize, hopefully.
Thank you, Mike. Thank you very much.
Cool. Any other questions or kind of thoughts for Martin or Kain? Wally, you had a question?
Hi. I would, if it's possible, a question for Kain. If you can just talk about how they use Chainlink for the price feed. I see it so many people or so many projects using Chainlink for their price feeds, but I still don't get it. How is it done in practical way? So if he can just give us some description, how do they do that?
Yeah, so I think you know, the current iteration of Chainlink, and like a lot of DeFi projects, you know, it's something that is a work in progress, right? The current iteration of Chainlink is a permissionless system of nodes where anyone can spin up a node and they can publish a price to this aggregator, right? And we then take that aggregator contract and we read the aggregator, which is very similar to what we're doing with our own internal Oracle. It's just that it's much more robust because you've got, you know, this kind of, you know, group of pseudonymous nodes that are operating somewhere. Where I think there is, you know, some gaps in the current iteration is, you know, essentially that there's no kind of crypto economic guarantees on that data now, right? Yeah. You know, so you don't necessarily, but that's coming, right? It's some, you know, staking and slashing and all that stuff's coming. But I think that, you know, if you're comparing the current state of our centralized Oracle and the risks around that versus the current state of Chainlink, it's, you know, significantly superior, and, you know, is something that, you know, obviously they spend all day thinking about, and it's something that we would prefer to not have to think about. And, you know, being able to kind of hand that off to them and let them sort of own, I guess, the data integrity side of that is something that, you know, we view as, you know, significantly beneficial for a number of reasons, you know, regulatory reasons, etc.
I agree, but again, you know, as my opinion is that in order to be an oracle, you need to have, you know, the outcome of some event could be an oracle, but if someone is pushing some information into the blockchain from the centralized point, okay, I get it that they use some kind of medianizer like they do in Maker. I assume they do it like that. But again, it's a pretty big risk, you know, to have such a good platform like Synthetix, but it's exposed to so many price feeds. And then again, you can just have one flow on one price feed. And the whole security is based on the Chainlink oracles. So basically, if they mess up with just one price, let's say for Palladium, when you put it in, how do you think you will have trust for all other price feeds that are getting through the Chainlink to your exchange?
Yeah, exactly. That's exactly right. That is the trade-off, right? And I think the interesting thing is, our centralized Oracle had a failure at one point, which was on the Korean won back in July of last year. It feels like 20 years ago, but July of last year, and that was due to the data providers downstream from us, right? It wasn't even an issue, with our Oracle. The Oracle was fine. It was data, it was a data integrity issue, right? And I think that, so long as we require this wide range of assets and price feeds, the chain link approach to this problem is significantly better. It's not perfect by any stretch, and it definitely can be improved. And the plan is for them to improve it and to put these crypto economic guarantees on it. But I think at the moment it's sufficient, at least in our view, it's sufficient, to the security guarantees are sufficient for the number of assets that we have and the value that's in the system as it stands now. Is it good enough for $1 billion or $1 trillion? No, but it will get there, I think.
Yeah. Okay.
Cool.
Thank you.
Thanks, Steve. Next question is from Wally. What kind of layer 2 solutions are you exploring and look the most promising to you? I guess this question for both of you.
Yeah, I can say we previously worked on snarks or rollups. Those are very promising, but we at the end then still decided, or we actually went back from them. So we started with them and we thought, okay, we would directly launch with this layer 2 solution, but decided to go back and have now a thing that's much less scalable actually, but has this composability. So we decided for composability and against scalability, because again, so far this is still a trade-off. Once we hit the capacity limits of blockchain right now, or basically it means right now, an order below $500, maybe even $1,000 doesn't really make sense, because the gas costs are in the range of easily $1 or $2, and that becomes already a big factor if you only trade $100. I mean, then you pay 1% just of the gas cost. That's something you don't want to do. But yeah, snarks, and of course Ethereum 2.0. I mean, it's coming. It takes forever, but it's still coming. I mean.
So I was actually testing today. I'm going to get killed at some point because people keep asking this question, and we're getting really close. But we're getting very close to a demo with the Optimism team. So we've been working with them pretty closely for the last several months. So stay tuned. We'll have some news out in the next hopefully few weeks.
Let me ask a
optimistic rollups.
Right.
Sorry, just saying it's optimistic rollups. Yeah.
Right. Let me ask a more general question about the kind of current state of Ethereum, and both from a technology side and kind of ETH 2.0 imminent kind of rollout. I mean, from those of us, for those of you who are kind of like working actively and rely on the ecosystem and the community, how are you? What's the general kind of tone and temperament? Is it feeling hopeful? Is it feeling kind of about the right type of pace given its complexity? And what are you hearing from others? I get a lot of mixed reports, and I'm curious as to those of you who are on the front lines and what you're experiencing. Martin, maybe you first.
Yeah, no, sure. Well, I'm almost always optimistic, and I am so currently as well. And I also hear it or see it from others. So, for example, this Black Thursday. When kind of everything, or when crypto markets crashed by 50%, of course that was in a way a bad thing. But on the other hand, I think that was the first time where Ethereum was the only place on Earth where you could reliably, within minutes, really reliably within minutes, still transfer at least millions. So stable coins are real, I mean, like they are used. And just the story from Gnosis. So we have a bank, we also wanted to transfer funds from our bank account, at those days because markets were moving and we wanted to trade something. And the story was, well, we tried to initiate the wire hours before banking hour closed, but the banking guys were in home office because of Corona crisis, and they didn't have their laptops that they would first need to order to kind of whatever. So at the end of the day, we could not move our funds from a bank account. We could always at any time move stable coins on Ethereum within minutes. I mean, there was network congestion. You would need to pay a few dollars in transaction fees, but if you paid a few dollars in transaction fees, you definitely could reliably move your stable coins. And I think that is something well, not everyone recognizes yet, but a bunch of people do recognize and kind of see that this is Ethereum can serve as this very reliable, always 24/7 settlement layer or clearing layer, and that's what I'm optimistic about.
But just to be kind of like put a finer point on it, I mean, that's something you could have said about, a year and a half ago or 2 years ago about Ethereum, right? But how about the next version, the kind of true scalability and that side of things?
Yeah, I mean, on the note, was this true 1 or 2 years ago? Well, I mean, technically from Ethereum, yes, but in terms of all the stable coins, even just Tether and USDC being now available in really billions, and the number of billions, that is a thing of the last year. From a technology perspective, I mean, on ETH 1.0, of course, not really anything has changed, but I don't even think that is so much necessary. I mean, there is of course the hope for ETH 2.0, but well, things will improve. But what I'm saying is, I think it really takes a while to appreciate and kind of for the whole ecosystem to use the full potential of already Ethereum 1.0. And I think, well, it's in a way similar with Bitcoin. So Bitcoin has not changed technology-wise for 10 years, basically. And it just takes years to appreciate this potential.
Got it. Kain, let me ask in a different way for you. How are you kind of feeling about Ethereum in the context of, many of the other protocols that have started to gain not only a lot of kind of prominence, but, market cap and attention and developer support, like the Algorand's and the Tezoses and upcoming Polkadots of the world? How do you think about kind of Ethereum in that context, especially in the kind of march up to ETH 2.0?
I mean, I think the gap has widened insanely, right? There was a period where everything that was being talked about on Ethereum was very theoretical, right? And hypothetical. It was these hypothetical things. Imagine if we had stable coins, and imagine if we had X and Y, and wouldn't it be great? And now, not only do we have them, but we have them in a way where there's so much demand that, on Black Thursday, it wasn't like something happened that caused Ethereum to be slow, right? It was a demand spike of people wanting to move funds, wanting to, liquidate positions. There's so much financial activity embedded in Ethereum now that there was a gas war to access it, right? And, we haven't really seen anything like that, since the ICO days, right? And I feel like this is a much more sustainable version of activity. So my sense is that over the last, say, 6 to 12 months, the gap has widened. It's a huge gulf, and I don't know if it's crossable by, a Tezos or a Definity or whoever.
One thing that where it shows this gap very clearly is if you just go to let me share CoinMarketCap, and you see and you filter for tokens, and you see that the top 30 tokens, over 30 tokens, are all on Ethereum. So the very top one is Tether, and that still says Omni, which would technically be Bitcoin, but that's not true anymore. So the most of Tether is actually on Ethereum. So Tezos and wherever those other platforms are, they simply cannot attract projects to issue their tokens on on the platform. So yeah, here in 65 you have Stella, okay, and then I don't know. So it's really Ethereum.
Do you think the answer to that question changes in the context of things like, you know, China's national blockchain, where they've just you know, been announcing support for DAMLs, digital assets kind of language and this kind of thing, where, you know, there's ostensibly very rapid adoption, forced adoption, maybe you could say.
Of course, I mean, like, if state actors are serious, they still have, well, a lot of leverage. I mean, there's no question about that. Of course, that could change things significantly, no question.
Is there a place for kind of, I mean, I know the answer to this, and it's kind of like a rhetorical question, but I mean, I guess what is the place for kind of independent chains and independent protocols in the context of, you know, I think what will be a very rapidly emerging class of new chains called like state chains or sovereign chains?
Yeah, I think there's like a, there's like a sort of Gresham's law of blockchains, right? Like, you know, the permission blockchains will, you know, you can force activity onto them, but if you've got this permissionless place, you know, this permissionless economic zone, I think it's going to, you know, accrue a lot of activity, will be kind of sucked into it. So, you know, at the moment, Ethereum is really the only sort of viable permissionless place for these, you know, sort of activities to occur.
Yeah, but then, I mean, well, to bring a counter argument, basically just what you, Kain, said minutes earlier. Of course, there are issues with this permissionlessness, and yeah, it might turn out that, or I don't think so, but it, of course, might turn out that this very well, if it is very well made state-controlled thing that has some sensible mechanisms to revert stuff or to control stuff and so on, it might turn out that that's more successful. I'm rooting for the permissionless one, and hope we get things right and get things, yeah, kind of build them robust enough and keep failure in mind, basically, so that although there are permissionlessness, we still have the right tools to address problems.
It's a concern for sure. I agree with you.
Okay, cool. Well, I think we're coming up on a little bit over an hour now. So what we'll do, unless there's any last questions from the group? No? Okay. If that's the case, then I think, you know, little applause for you guys.
Nice, nice. Where are the beers? When do we get the beers?
It's
11 a.m. here. It's a little bit early for beers.
So thank you, Martin, and thank you to Kain for participating. What we can do now is, I guess we can just hang out for a little bit. If I can ask both Martin and Kain to just hang out a little bit more, we can do a bit of networking, or if anybody just wants to chat and you know, hang out. Otherwise, thanks everybody for kind of jumping on. I know it's a bit rough the way we're kind of organizing this, but a good first start to the Ethereum HK virtual meetup, and stay tuned to the meetup for what I hope is going to be a regular kind of stream, no pun intended, of meetups happening virtually. So thanks again, guys.
Awesome. Thank you very much.
Thank you.
Thanks for organizing. So we actually use Zoom.
Yeah, the virtual background, so I can get like an Ethereum HK branded virtual background. Get the logos.
Yeah. So we use Zoom for our governance calls, and it's quite good. Like, you know, you can set up a panel, and it takes a little bit of configuring, but you know, a few hours, and it's quite powerful. People can kind of, you know, form a panel and ask questions and feed it through. It's good.
Yeah, yeah. I think.
You said you hearing mixed sentiments about Ethereum. What are the negative sentiments?
Oh, literally, somebody was just kind of pinging me about you know, the kind of rollout plan. This idea that, I don't know if it's true or not. I haven't really dug into it. That there's some type of like 1.5 year kind of like staking type of like requirement. Do you know what that's about? And can you maybe explain that?
So, but just to understand your question, so basically it's saying concerns about the 2.0 rollout, right?
Concerns about the 2.0 rollout and the kind of amount, like the mechanism, I guess, the mechanism of
Okay, so,
how tokens will be,
right.
how long they need to be staked for, locked up for,
right,
etc.
Right. So
One
one
from what your understanding is.
Yeah. On this note, so the plan currently is that you have to lock down your Ether, but effectively, what you're really doing, if you kind of phrase it, in a way you can phrase it, you are burning actually Ether and you're generating this Ether 2.0, but it's not compatible. So you can't then get this Ether 2.0 back to Ether, at least at the beginning. And I think this is the 1.5 years potentially. So potentially for some time, this Ether 2.0 will be locked. You can't even move it. You can't even transfer it at the very beginning. So yeah, I think that is, I mean, of course, that is something, the idea is to build this bridge as soon as possible. But I think in a way, it's also a smart way to do it because it creates a lot of buy-in into this new thing.
So from a user experience standpoint, what do I actually need to do?
Yeah, and I think you need to deposit your Ether. I mean, you will need some software, some mining pool, or some validator software. I think there will be pools pretty soon where you don't have to run the validator yourself, but delegate it to pool. I'm pretty sure exchanges will offer this service very soon, which I have mixed feelings about. On the one hand, of course, it's great for the user. It's very convenient. They just deposit their Ether and get some percentage on it. And probably exchanges can make it tradable. So even if it's not movable or tradable on Ethereum, as long as it's all in the exchange address, they can of course tokenize it or make it tradable on the exchange. So on the one hand, that will be very convenient. On the other hand, it's of course a big, issue regarding decentralization. If then 30%, 40% of the stakers are coming just from Coinbase and Binance. So I really hope that we get it to a point where it becomes feasible for at least someone who's semi-interested or kind of a little bit willing to have a small machine sitting, really a small machine. I have kind of a machine of that size in my other room, and that would should in principle be good enough to do the job as a validator, but we don't know yet how that will play out in practice.
Got it.
And I think, there's definitely a lot of focus on ETH 2.0 right now. And, maybe I'm overly optimistic, no pun intended, but, I do really think that the activity that's happening on DeFi and the amount of sort of financial infrastructure that's been built up is, the current layer 1 Ethereum is more than sufficient to handle that, right? Yes, it has to be high value transactions, but we're seeing a lot of economic activity going on layer 1, and I think that the next phase is starting to implement things like ZK rollups and optimistic rollups, and I think then you can take that to like 10x. That feels to me like that gets us well past like Beacon Chain launch in 2 years. Like I feel like we've got 3, 4, 5 years to run in various kind of scaling solutions for L1. That's my sense as someone who's kind of built, like, I'm not sitting here, losing sleep over, are we going to, run out of capacity, on L1 in the next, few years. I think we'll be okay.
Yeah. But it simply means, in my view, financial applications are what are viable. Just something random where the transaction value of a transaction is less than $1, that will not be viable anytime soon.
Sorry, say again?
Well, yeah, I mean, I'm just saying kind of higher value-ish transactions. So I would say, as a rule of thumb, the transaction value needs to be at least $1,000. Otherwise, you might get in trouble soon.
Because of the
gas prices.
The gas costs, yeah, the implicit transaction costs.
Have you guys checked out Orchid and what they're doing with their probabilistic nano payments and such?
Not recently. I mean, I kind of heard of them, but
Yeah. Tris, do you mind to mute? We're getting some background. Anyway, so yeah, I think take a look. I mean, they're in our portfolio, so I pay a lot of attention to them, and they launched about like a couple months ago. It's pretty interesting the way that they're doing it. I mean, I think there actually are a number of kind of scalability solutions that are you know, in production and are working. Another one of our investments is Connext, and they were the ones who kind of were behind SpankChain, et cetera. So I think there are some.
Okay. Right. I mean, maybe I should be more precise. So of course, Connext or a payment channel, or like for just pure token transfers, yeah, there will be plenty of solutions to make also small value transfers. But for transfer, or I'd say a transaction, a DeFi transaction that is on chain and that combines different protocols and so on. So something, yeah, where you need this composability and not just the isolated token transfer. That I think will, for the foreseeable future, need to happen on Ethereum, because really that's where the protocols come together. And again, there we will have high-ish transaction fees. But yeah, you can of course build separate applications that do not need to interact too much with other things, much more scalable.
Cool. Cool. Any other projects that you guys are excited about? Seems like there's a lot more things that are coming out.
Yeah, it's impossible to keep track these days. You know, even just trying to keep track of all the newsletters with, you know, launches and things is quite difficult. But I mean, there's stuff that's been out for a while that, you know, I still think is not getting as much coverage. Things like Tornado Cash, for example. You know, I'm a big fan of. You know, it's a very, very easy mixing service. It's not perfect from a you know, privacy and security standpoint, but V2 is coming out pretty soon, so I think that's going to be a big improvement. And you know, it's more than sufficient for the average person's needs, I think. So you know, there's really cool stuff like that. And you know, again, obviously all of the roll-ups and sort of scaling solutions, I think are pretty exciting as well. Yeah, it's I think my daughter hangs out with Martin almost as much as she hangs out with me. We're always on calls around this time of night. I think it's the link up. So but yeah, it's bedtime now, so I better. I'm in Sydney. So it's about 7:30. So yeah, so getting close to bedtime. So I'll probably jump off.
Awesome. I think I'll probably close it off here, unless there's any other kind of like last questions or anybody else wants to hang out. I'm happy to keep it on, unless if anybody wants.
Yeah, just a quick question for Kain, if it's possible. Do you have any plans adding Chinese yuan on Synthetix?
Yeah. You know, so when we were in our kind of transitional phase between Haven and Synthetix, we added a bunch of fiat currencies, which didn't get as much traction as we would have liked. And I think that, you know, we're starting to get more interest on those fiat currencies to act as you know, quote currencies on the exchange. So I think we will over the next like 3 to 6 months add additional fiat currencies, but we just don't want to do it now until we get Chainlink up and running, and then, you know, we'll start to kind of roll that out. So yeah, definitely, it's something we'll look at.
Okay, thanks.
No worries. All right, thanks again. I'll jump off.
Can I have
appreciate
a question,
you organizing.
Thanks, Kain. Have a good night.
For me or
for everyone, probably.
Just generally. Oh, great. Okay, cool. All right, thanks, guys. See ya. Bye.
Can I have a question, please?
Sure.
Yeah, go for it. We're just hanging out. Anybody can ask any questions. We're just hanging out.
Yeah, I was actually wondering. It's kind of a more philosophical, probably question. Is about the trade-offs between what you call it. You know, that Ethereum community is often accused of sacrificing the overall security for the speed of the development. Like, say, if you take a more like people from hardcore Bitcoin community. To say, okay, our approach is to make things slow and to go into every detail before we actually put the things into work. In the Ethereum ecosystem, it seems to be going quite a different way. Like people are going fast, people are experimenting, and people are trying to implement things just on the go. You know.
I think
sometimes
here
yeah, please.
Yeah, I think it's super important here to make the distinction between the protocol and the applications. So on the protocol, well, in a way, Ethereum has not really made any changes. I mean, minor changes since the launch. So that's now, what is it, 5 years now? 5, 6, whatever, quite a while. And the protocol has worked. I mean, it hasn't. There has been not a single hour of downtime. So it has basically a very similar grade of reliability and stability as Ethereum, and also as Bitcoin, and also the fact that the Ethereum 2.0 rollout is taking so long is of course a consequence of being very careful and doing a lot of tests. That is in stark contrast to the applications. So as a smart contract, I mean, there you have the full range. You have some teams that take a long time and kind of go through a process, but of course you have, it's a permissionless thing. So of course you have the two people teams that just throw out a contract, and of course, those things can and do cause issues. But yeah, I think it's really important to not mix those things up.
Okay, thank you very much.
Yeah, I think it's kind of all relative too. I mean, for some of us, we feel like Ethereum is moving too slowly. You know, and there's a lot of things that we would like to see. But to be honest, I think that the biggest question is not about fast or slow and I would agree that you know, safe or not safe is a kind of critical path. But it's also like utility, not utility. Bitcoin has utility, but I would argue not that much. It has prominence and it has brand. And it has, you know, a wide-ranging kind of use as a store of value-ish and, you know, transfer value, but it really can't do that much else. And it's probably going to be quite difficult for it to do much else. Whereas Ethereum doesn't have that much utility at the moment, but it's starting to. And that's kind of where I think it starts to get really interesting, where, again, we're starting to see products that have millions of users, and that's unheard of, I think, in crypto and blockchain. And it's starting to be a thing in, you know, I would say this year. I can think of maybe a couple that have actual 800,000 to 1 million users in crypto. They're not all doing it in pure, you know, kind of centralized format, and they're not, you know, maybe they're batching transactions because the network can't handle it. But the user doesn't actually care, like, as long as they're getting the user experience they want. So I think that's where it starts, and I think that's how I would start to kind of like measure, or at least I would throw that in as the third leg of the tripod in terms of like utility, security, and speed.
Yeah, I mean, just on the kind of measurement. So like if we look at Ethereum 1.0, we will for sure not see 1 million users anytime soon, but we still see can see quite high value or high-ish value volumes. I mean, of course, the DEX volume is still very even in aggregate small, and I think just crossed a few billion over the last years actually of all DEXs in aggregate. But yeah, it's growing, and the stablecoin transfers surpassed platforms like Venmo So yeah.
Cool. Well, I think from there, maybe we'll kind of wrap it up. Again, Martin, thanks again for taking time out and giving us the update on Gnosis and Gnosis protocol. Good luck with all of it. Continue keeping us up to date, and for the rest of you, stay tuned to the meetup and enjoy the rest of your week. Thanks, everyone.
Thanks, John.
Thank you very much. Thank you.
Take care. Bye.
Bye.